GoodRx is an app that lets you search a drug, select a strength and quantity, and find often a reduced price at various pharmacies for the drug via coupons. It's been around for over a decade now, and its ubiquity across large pharmacy chains helps with drug affordability. These coupons can't be used on top of insurance though. So you either pay the price listed on GoodRx, or if you have insurance, you pay your insurance copay. GoodRx does some shady shit. It is an American tech company after all. But if we understand ourselves as consumers of healthcare searching for competitive prices, then GoodRx has undeniably furthered this cause. The idea of healthcare price transparency is something the right adores. If only every healthcare consumer knew the pricing landscape better, we could keep prices down through market competition because consumers rationally seek the highest quality for the lowest price.
It's just good business.
Of course, as I've talked about before, healthcare doesn't map well onto a market-based system. Those who spend the most on healthcare tend to know less about how the healthcare system works and have less money to pay for it. The important point here being that it is not a toy or a TV, but a need. TrumpRx is basically GoodRx Lite. It uses the same coupon system to bring down drug prices. The website almost exclusively lists brand name only drugs, with maybe 2 generics. For clarification, brand name only drugs have no generic available on the market since a pharmaceutical company still owns a patent on them. Once that patent expires, usually after about 10 years, other companies can use the same active ingredient as the brand name only drug and have it approved by the FDA as a biosimilar generic, meaning it's recognized to have the same effectiveness as the brand name only drug does.
Glutide, semaglutide, semaglutide.
The 69 drugs listed on the site as of April are only a fraction of the over 2,000 brand name only drugs on the market. Trump's impetus for this whole endeavor was,
we're gonna have the lowest prices in the world. This will result in the largest drop in prescription drug prices.
But it seems he's still learning the art of the deal when it comes to negotiating with drug manufacturers. Critics of the New York Times article where this graph appears rightfully pointed out that exchange rates don't necessarily reflect how the price of the same goods and services can differ between countries, which is fair. And yes, these prices and the list of drugs available are still evolving. But can we consider coupons for individual brand name only drugs even one pillar of what a robust healthcare financing system would look like? Because these coupons can't stack on top of insurance copays, TrumpRx doesn't address high drug copays for those with insurance. Most people with insurance will pay a lower copay price than they would using these coupons. For example, most people I see getting GLP-1s approved by their insurance nowadays aren't paying more than a $25 copay a month. Compare that to the $300 price with a coupon. But with insurance, there is the issue of deductibles. A deductible is insurance lingo for charging a higher copay at the beginning of the year. Once the person insured meets the deductible amount, then the insurance will charge a lower copay.
Let's say you need to fill your Tier 3 drug that costs $600. Your first prescription fill of the year could look something like this. Because your drug cost is higher than the deductible, you'll owe the full $400 deductible amount.
For Medicare, the 2026 drug copay deductible is $615. So it's possible that someone could get hit with a high copay at the beginning of the year, a higher copay price than the drug coupon price, in which case GoodRx or TrumpRx would help them out. However, if they use a coupon, then they won't pay down their deductible. When they go to get their med the next month, they'll get hit with that same high drug copay from their insurance. It's possible then that while the drug cost is lower using the coupon than what it would have been for that initial high deductible, over the course of the year, the person insured will end up paying more money overall since they never met the initial deductible to unlock the lower copay amount through their insurance. Despite the lower copay after the high deductible is met, if the person insured doesn't have $600 lying around that first month, then they might decide to pay the $300 drug coupon price instead. The high initial deductible essentially forces them into paying more in drug costs over the course of the year than the person insured might have if the deductible were instead spread throughout the whole year. Okay, but this is all a problem with insurance policy, not with TrumpRx, so why am I talking about it? Because the current administration wants to point to TrumpRx as a major boon to Americans rather than addressing issues like high insurance deductibles. Not to mention that for those without insurance who most likely live just above the federal poverty level, a $300 drug coupon isn't going to help them get their meds. Also, whatever happened to the right's hatred of government intervention in the market? I guess it's okay if we're bringing down the price of Wegovy and fertility meds? If the current administration really wants to bring Americans better drug prices, it should instead focus on reducing the growing administrative costs of healthcare. It should also take steps towards covering the millions of people without health insurance.
Everybody's got to be covered. This is an unrepublican thing for me to say.
Universal health care.
I am going to take care of.
But they're not going to do these things because their goal isn't actually reducing healthcare costs, at least not for those who need it. They've already ended Obamacare requirements for individually mandated health insurance, a policy that helps bring down premiums for poor and older people who use health services more. Like I said before, TrumpRx is all a big hand gesture. Look here at these marginal benefits we're providing to some, but don't look over here while we cut Medicaid funding and lower taxes on the rich.
How about a magic trick?
Okay, but is TrumpRx really all this administration is doing to address rising healthcare costs? FSAs and HSAs are known as tax-preferred accounts, meaning that before getting taxed, part of a worker's income can go into these accounts. Effectively, this increases the worker's net pay by reducing their taxable income. Purchases using funds from these accounts are limited to certain items and services. In the case of HSAs and certain FSAs, they're limited to health spending. Of course, what purchases count as health spending must be agreed upon. While the IRS specifically excludes using these funds to pay for health insurance premiums, they can be used to cover other health necessities like ice baths or a hemlock spa. Basically, tax-preferred accounts are an IRS loophole, but one that's available to most workers, which, I mean, that's kind of fair, right? At least it's not just benefiting the rich. Say you were going to buy an eligible item with price P using your tax-preferred account. If you paid for it with your after-tax income, then you'd be paying that same price, P. But if you use your tax-preferred account, instead of paying the full price, you're basically getting a discount equivalent to your tax rate, T. Dollars in tax-preferred accounts thus go T% further since they're sheltered from taxation. Instead of paying P, you're paying P times 1 minus your tax rate. We can see then that the higher your tax rate or the richer you are, the more of a discount you're getting. In this way, HSAs and FSAs are regressive. They benefit the rich more than the poor. For those making less than $50K a year, the highest discount they'll get is 12% because that's what their marginal tax rate is. For those making above that, they could get anywhere from a 22% discount up to as high as a 37% discount. Let's look at this in action with two different goods. First up is Tylenol, which I'm gonna round up to be about $10. So for the person who has a tax rate of 12%, we take that $10, we subtract 1 minus their tax rate, so we get $10 times 88% effectively, and so they're gonna be paying $8.80 for that Tylenol. Now let's look at someone who has a tax rate of 37%. $10, 1 minus 37%, we get $10 times 63%, $6.30. So like a $2 difference here between the two costs. Okay, not that big a deal. Now let's take a look at that $2,000 hemlock spa. So again, we have 12% tax rate. 88% of $2,000 is $1,760. So the person making $50K a year is roughly getting a $240 discount. Now, for the person who has a tax rate of 37%, which would be someone making over 640 grand a year. $2,000 times 63% in this case is $500 lower than what the person getting the 12% discount is paying. So that's a pretty significant amount. Okay, and you might say, well, hey, at least everyone gets some discount. Sure, but the important thing here is what kind of economic incentives this creates. HSAs and FSAs incentivize the rich to spend their money on healthcare goods and services to a greater extent than poor folk, despite the fact that we know poor folk account for a higher portion of healthcare spending on the whole. Plus, adding this tax loophole intensifies the administrative burden of healthcare and spurs the creation of entire segments of the economy meant solely to handle these accounts. Companies created in service of this tax loophole earn money off the accounts they oversee, getting paid by the healthcare user via fees and with the interest on the money these accounts hold. So there's a value going toward the profit of individual companies rather than toward the public tax pool. The user fees represent money that could have gone directly to healthcare services, while the money held in the accounts themselves represent foregone tax revenue. Because these tax-preferred accounts result in lower tax revenue, economists have a different name for them: tax expenditure accounts. They're a quintessential example of the tax shelter. Tax-preferred accounts overall, not just HSAs and FSAs, are a large public subsidy to the rich. In the case of the previous example of the $2,000 Hemlock Spa, we can think of that as a $240 subsidy for the person making $50K a year and a $740 subsidy for the guy making $626K a year. And let's be honest, is someone making less than $50K buying a $2,000 Hemlock Spa? The right depicts tax deduction policies as ways we can reduce the tax burden and utilize the private sector to accomplish a task. But in reality, these tax deductions are a governmental expense, increasing the overall tax burden. The foregone tax revenue from tax-preferred accounts in general is on the magnitude of hundreds of billions of dollars annually, possibly even several trillion. For any politician actually concerned about the national debt and not just using it as a talking point to promote fiscal austerity, these accounts should be the first place they look to start balancing the budget. As I mentioned previously, the IRS doesn't allow HSAs and FSAs to pay for health insurance premiums, which have constituted a bulk of the rising healthcare costs for many in recent years. Why is this the case? As I pointed out in my last video, when you don't have, or in the US's case, do away with, an individual health insurance mandate for community-rated plans like those created by Obamacare, then younger people who on the whole don't need healthcare services as much just won't buy health insurance. With less money paid into the pool, premiums go up for everyone else. Uwe Reinhardt says you can solve the regressive nature of these tax-preferred accounts by giving everyone the same discount rate instead of basing it on the individual's tax rate. Which is fair, but again, are market-based solutions based on consumer choice really what's going to help fix healthcare costs in the US? Most of this administration's healthcare financing moves are really just a bait and switch. The right offers up drug discounts and tax-preferred accounts as examples of how they're helping Americans with healthcare costs, but at the same time, they're lowering taxes on the rich and cutting Medicaid. It's clear what their priorities are, and I mean, it's the right. What do you expect? So one last point I wanted to make, which I didn't include in my script, and something that I talked a little bit more about last video, but I wanted to address this time as well. I don't want to come across as if Obamacare was the grand solution to our healthcare woes, and if only we could go back to that time, everything would be perfect. That's certainly not the case. As I mentioned last episode, Obamacare, as Uwe Reinhardt put it, was just kind of like a band-aid on a pretty broken system. So it was, Obamacare was a step in the right direction, but there's still way more to be done beyond that to address the inequitable cost of healthcare for many in the US and around the world, honestly. But yeah, so see you next time.